What's up, everybody? Welcome to another edition of Zacks Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're going to be talking about Ulta, ticker ULTA. Now, whole lot going on in the market today. We're definitely going to talk. I got to talk a little bit about the market before we get into this Ulta specific stuff that we're going to talk about today. Per popular demand, I have decided to add a feed tomorrow. So we're going to do a Broadcom feed, a day of Broadcom feed. Ask and you shall receive, guys. I try to accommodate. So tomorrow, 11 o'clock Central, we're going to talk about Broadcom because it's a day of feed kind of thing. So might as well, right? We'll talk about the Broadcom and then the Best Buy. I don't know. Maybe we'll. I don't know. We'll figure it out. We will figure out if I want to do Best Buy. Maybe I might push it to Friday. Did I have it on Friday originally? I don't even know what's going on anymore. But we will have the morning after on Friday morning, of course. And hopefully there'll be some good stuff going. Usual suspects are here. What's up, Trevor, Kurt, Dr. Paul, Bruno, coming all the way in from Portugal, blessing us with his presence. So a couple of things, guys, before I get in this Ulta. Has anybody else been having problems with freestockcharts.com? All of this crap with this the ads just crashing. Now, I know, guys, I know what you're going to say, because I say it too. What the heck are we using Internet Explorer for? Well, that's just it's the only browser that we could use freestockcharts.com in. And it crashes all of the time. Just nonstop crashing. Very frustrating for me, because I like to use this to give you guys real-time stuff, right? I guess I'll level with you guys at night. Oh, what's up, Mr. Wallace, David H., and Bill in the building. After the market close, okay, it's working fine for you. It keeps crashing all the time for me. Kyle, how you doing? So I don't use, I use freestockcharts.com when I'm talking to you guys, for real-time stuff. I used to subscribe to this thing, Active Tick, which was like $20, right? It was free real-time quotes. It was all good. Now that I trade so much, obviously E-Trade has given me, I got E-Trade Pro and I can do that, but, I get used to things, right? And for a while, I used to use, so freestockcharts.com, it's part of Ward and Telechart, right? This is like the free arm. You can get Ward and Telechart. I'm thinking of going back to that. Or, you guys know I love NinjaTrader. The thing is, I don't know why there's not like a real quick, easy fix with regards to the data. It's just wonky, right? You should just be able to kind of download and say, okay, let's go, let's do it, boom, and we're off to the races. But it's like you have to buy a data feed separately when it comes to NinjaTrader. So you sign up with the data feed, and they give you all this stuff, and then they send you your login info. And then, I ended up getting login with them as like a free trial because I promote, NinjaTrader and stuff for them. And then, but then it like doesn't work anymore. So now I have to go back to the vendor and be like, hey guys, why isn't this working? Why am I having a headache? It should not have a headache, right? This should be easy things. Just inefficiencies in their business model, I suppose, but whatever. So anyway, I do most of my analysis on a nightly basis using NinjaTrader. NinjaTrader is free. Anybody, you can download NinjaTrader. I have a link for you guys if you want it. We have like a specific, vendor link or whatever. I don't get anything from it. Because it's free, right? But anyway, I like to use NinjaTrader. They have a free end of day option in it. Why don't I just fire up NinjaTrader? I'm going to do that right here, so you guys can see what I'm talking about. I like using it obviously you can, this is primarily a futures trading platform. So whenever I was trading futures, this is what I would use. You gotta give me a hot second here because I'm overlapping the chat here. Okay. So whenever you open up NinjaTrader, you get all these windows popping up, right? So the control window, so your main window is here, and even if this was, you know, I have like a better license here, but even on the free license, it has this ConnectTick end-of-day free connection. So what that gives you is free data, end-of-day data on pretty much everything, which is great. But the negative of it is that it's not real time, right? So I can pull up Ulta on this, and NinjaTrader doesn't. Well, it has crashed on me before, but it's rare that it crashes. I like it because you can add all sorts of custom scripts. There's a ton of people out there that have indicators for you that you could use. So it's very adaptable, and I like it. And you could put in custom all sorts of whatever crazy indicator you want. And even their default list is pretty extensive. So here you have the default list of indicators along with some other stuff that this NCAT Smart View app is something that I bought. Anyway, so there's all these things. And the cool part is in some of them it'll actually describe what it is. But you can download others, and it's cool. You got Darvis boxes, all sorts of neat, crazy stuff. You can be as complicated as you'd like to be. I used to use like this volume profile. I like to add that on occasion, and this is very similar. This is similar to. No, it's volume zones, right? The volume zones? I forget which one it is. I think it's volume zones. There we go. Volume zones, which is very similar to the horizontal histograph we get in freestockcharts.com that shows us that sort of volume profile that tells you, remember we were talking yesterday, shows you where, at what price levels there's been a lot of volume here. Right? So here you can see on Ulta that a good chunk of this volume has been in the sort of 255 to 260 range. But that has served as sort of a firm top, and you can see with the price action in July started to approach that level and then sold off. So then now it's really being pushed away from that center. Retesting the lows here. On NinjaTrader, you can always pull up your data box. But I can give you exact numbers. So the low here, 225.13, just about $6 shy of the current price action. So obviously, this is what happens. 50-day, long time ago. 200-day, long time ago. So now, and this is, I was talking about this, I think yesterday with you guys, this cross, right? The death cross, the 50 under the 200, right? That's a little late. That shows up at 250 after the stock's already gone from 315 all the way down to 250, right? And then so you get another, I mean, in this case it worked out for another $20, but I don't think the death cross was the reason why. And like I said, I'll rant about that and that's something I got going on next week or the week after. Overall, this is a terrible picture for Ulta. Even the money flows negative since May. Negative heading into this dip, right? End of May, money flows coming negative, and then the dip happens. Little bit of good news though. Money flows starting to get more positive. Stock still selling off, so there is bullish divergence, my friends, between the price action in Ulta and money flows. Important to point out though, still negative, right? So yet to cross the zero line. It's improving, still hasn't crossed the zero line. So you definitely want to see it cross the zero before you say, oh man, something's really out of place here. In terms of commodity channel index, down through the zero line, giving you a sell signal there, has remained oversold. And this continuation pattern here is the exact opposite of a buy signal that I like to use. So let me highlight this a little bit better. So a pattern that I use often in Momentum Trader is I wait for the commodity channel index to get from overbought territory back to the zero line when we're near highs, and I buy. And that's a solid continuation pattern that pays off for me a lot. On the flip side, an oversold commodity channel index comes down to the zero line when the stock's near lows and then bounces to the downside, and that's a continuation of the downside, and this is exactly what you got here. So perhaps that move's already been made. I don't know. This is a mighty sell-off. So we're going to dig into the price consensus EPS surprise chart because there's a question that we need to answer. On this sell-off here, from here down to here, okay? There's two things, right, that can change. So we know obviously that price has gone down, but what's happened to EPS, okay? What has happened to EPS? So assuming that the EPS has remained relatively constant, that means this PE is contracting. So why is there multiple contraction taking place? So is it contraction or EPS? Or both, right? Because on the flip side, when these growth stocks are getting exponential, you have PE multiple expansion and you have earnings ticking up in the right direction. So that's forcing that price higher. So what you got to see is what erased this year, right? I mean, they just came in and just said, let's pretend that never happened. What happened to justify this dip to the downside, okay? That's what we've got to answer. So let's look at the price consensus and EPS surprise chart on Zacks.com. Does this look like a price consensus and EPS surprise chart of a stock that should be down $100? It's not quite 100. It's pretty darn close. As always, the black line here corresponds to the right y-axis, which is price. Little green arrows are earnings beats. Red arrows, earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates, correspond to the left y-axis, which is EPS. Now, what do we got? Got some pressure here into 2014, but then you have promises of growth and you have EPS estimates that start high and end higher. And even specifically for 2017, you got the same thing. You have high and it ends higher. And then now into 2018, you have it high and it's still kind of gone higher. So what gives? There's nothing standing out big time in this chart other than we got spoiled because these EPS estimates are creeping up so fast and then now they're leveling off. And I'm sure the fear is we don't want the trough to the downside because that is the risk here. And this is the cool part about these price consensus and EPS surprise charts. You can see the trough. So here into 2013 and 2014, you see the trough of EPS. Troughed right about here. Should it come as a surprise that that's when the stock took off? Certainly should not. So you can see the change. Now, the detractors here are going to say, uh-oh. Well, we can start to see the change and this thing is going to roll over. That's what the bears are saying. Let's see why this is in fact the Zacks rank number 4 sell right now, right? Like, why is this a 4? Let's see. Gonna report after the bell mañana, so you get the rest of the trading day today and tomorrow to decide if you want to make a move on this. The industry's in the bottom 5% of our Zacks industry rank, so that's no good. Let's look at these revenue numbers. So pretty solid. Current quarter looks like 20%. Next quarter, 18%. Brings the current year in at 2082. Next year, 1465. Just on the revenue end of things. So revenue slowing. On the EPS side, how's that going to translate? Still a solid quarter this quarter, with 24% EPS growth. Next quarter looks like 19.34. Current year number 2702. Next year 18.9. So still solid growth. Now here's the weird part. Okay. In terms of agreement, over the last 30 days, you have a brave soul that has come out and increased the EPS estimate for Ulta. On the flip side, we've got an analyst going out to next year's numbers and getting a little bit more bearish. Now, what's the overall impact on our magnitude here, on our Zacks consensus estimate? Well, we've gone from $1.77 to $1.78 for the current quarter, so nobody really cares. Here's why. Here's a negative. Is next quarter number going from 170 to 167. Current year number going from 813 to 828. Next year from 977 to 985. So part of what I do here is interpreting Zacks ranks. I would say on the whole, this is probably a pretty strong Zacks rank number 4 sell, because we actually have estimates moving in the right direction for the most part. Next quarter not so good, but current year looks good. Next year looks good. Just you have disagreement here. They're not moving in the right direction. They're not all moving together. So that's why. So you know, you guys, there's aspects to this, right? It isn't like the Zacks analyst. The popular misconception is it's a bunch of dudes at Zacks sitting around a table going, man, it's a sell. It's not how it works. These are other analysts out there from various companies, William Blair, Oppenheimer, making these estimate revisions based on their revisions compared to the revisions of other companies out there, other stocks out there. We fit them into different categories, okay? And sometimes they get a little fuzzy. So here on a sell, I don't know that this is the strongest sell that I've seen, okay? All right. Let's look at some details. Assuming this will work. There we go. Let's get back to normal here. Here we go. Okay. Back to the revenues. I don't know what's happening here with me today. Let's go last 5 years of revenue data. So we can see here 20%, 21%, 21%, 23%, 20%. So the MO has been 20% revenue growth. So you can see why some investors are concerned when you're talking about next year. It's only going to be 14.65% revenue growth. That's an issue. When you take that step, this 20 is a magical number. And when you deviate from the 20, then you got some issues. So that's part of it. It's part of this. Let's look at the EPS side, kind of the efficiency. And you'll see EPS 20s, 30, 27 this year, and then 18 and 14. So they still think they're going to maintain their EPS and such. Now, what you got to ask yourself is this contraction in EPS growth. I want to clarify that. You can't stress that enough. Contraction in EPS growth. Not contraction in EPS, but just a contraction in growth. Is that worth this company taking the hit that it has? I don't know if we've shown this in a while. I don't know that I've ever shown this. 5 years, good. Okay. So you guys see what we got here. We got the price of Ulta versus trailing 12 months EPS times 10. They did that just to fit it on the chart here, right? So you can see the major downturn in the price hasn't really even affected our trailing 12 EPS estimates, or I'm sorry, the EPS is maintained, right, even as the stock has come down. So this was one of the things I was kind of the first question of the day, right, that I brought up was, okay, is this dip in Ulta caused by a contraction in the valuation or a dip down in EPS? So it's definitely valuation induced. Now I think I have, yes, of course I do. Let's look at forward. Let's just look at trailing. We can look at trailing PE here for Ulta, and you can see what happened as we've gone from 45 down to 33.19. Last time we were this low was the start of 2016. And then before that, back in 2014, is where you got to go to get valuations that low. And pay no attention to this market here. Remember, guys, I could pull up the Zacks industry here. We can have this. Irrelevant, really. I'm worried about Ulta right now. So this is trailing 12. So this is looking backwards. We can also look at this looking forwards. That's right, guys. I know I'm bragging. I'm showing off my Zacks tools here today. So this is looking forward 12 months. And this answers another question for us, right? Well, if we do know that perhaps EPS is going to slow over the course of the next year or two, the contraction in valuation, how bad is it? And here it's 25 times, so we're still below this sort of January or February, whatever. We'll look at the chart. We'll know of 2016. Like, should we be down there based on where this has been historically, right? Pretty cool. Pretty cool. Now we could sit here and do 100 of these, right? I could look at all sorts of stuff: free cash flow, enterprise value, earnings yield, all sorts of stuff. Just for giggles, guys, what do you want to see? A gross margin? EBITDA margin? Let's do gross margin. How about that? Just for giggles. I got this up here. We don't normally talk about this kind of stuff, but while we're here, just going to giggle. Better than they were in 2016. Interesting stuff. Okay? Okay. Now, let's get back to business, folks. And that means surprise. Consolidated surprise. Who does Ulta compete with, Trevor? Walgreens. That's right. Walgreens. CVS. That's who they were targeted. That's who they targeted initially. They were basically saying, we want to change the way that the beauty client gets their cosmetics / personal care products / whatever, right? So they saw this huge market opportunity because the limited counters that they had at, the Walgreens of the world and the CVS's of the world and things like that, right? I mean, it's pretty big, but it's not, it's no Ulta, right? And then so they're like, well, we can get shoppers from there because women are still going to go. And I'm saying women, I know this is kind of sexist or whatever, but I mean, it's not sexist. It's a bunch of women's stuff at Ulta. I get my beard oil from there, though, so there's that. But overall, I get cologne from there sometimes, too. Sephora, though, Trevor. So initially, it's these CVS's of the world and the Walgreens of the world. And that's who Ulta will tell you their competition was. So what they wanted to do is start to get customers away from those stores coming into their stores. So they started unloading this huge, fantastic loyalty program that they unrolled, and the women loved it. Everybody loves it because it's a great rewards program. You get money back, and it's just great. So now you're starting to build this following, and people are coming back in there. And then not only that, but you have, some of them have, I think, little salons in there and all sorts of stuff. So, but Ulta will tell you it's Walgreens, blah, blah, blah. But then the other one, of course, is Sephora, of course, right? There's competition there. There's enough. There's enough meat. There's a big enough market where they're not cannibalizing themselves at all yet. And the risk that Amazon is going to come in and destroy these guys is overblown. I remember when, so everybody's afraid of this, the internet's going to come and all the brick and mortar guys are going to die. There's certain things that people still enjoy doing and need to be hands-on about. And when it comes, like, have you ever went with your girlfriend to Ulta or your wife? There's a whole scientific process that they go through to try and figure out what it is that they want. You can't do that on a web browser. So you might think people are going to know what they want and then just go online and get it, but it's just not the case. Because they could try out new things. They got to see how it's, with cologne and perfume, right? You got to see how it's going to smell on you because everybody's got their own little body's chemistry composition, right? And then when it comes to the makeup and such, they have to see and try if that shade really looks the way that they want on them. They have to put it on their own skin and go and try it out. So there's a lot of things that are more hands-on about the Ulta experience versus something much more homogenized like electronics, stuff like that. And yeah, Sephora's in the malls, but there's nothing stopping those guys from not just being in malls. They can go to strip malls. The thing is, there's just plenty. There's plenty. And it's the experience of Ulta, and it's a wonderful experience to go to Ulta. There's a huge... I was talking to somebody who works at Ritz-Carlton, and he's very frustrated because he's trying to run this place for them, the spa, and they are not giving him the hours that he needs in order to have it staffed enough so that they can deliver that superior customer experience to people. When you talk Ritz-Carlton, that's supposed to be... When I think Ritz-Carlton, I think of the greatest service imaginable, right? That's how they differentiate. So with Ulta here, they're trying to deliver that superior customer experience. Now, the Ritz-Carlton thing, I know I'm going on a little bit of tangent, but he's actually upset that they're not giving him the hours, so they're not able to deliver the service. And then that speaks to Ritz-Carlton maybe having some problems. That's what happens when the bean counters get involved. Ulta doesn't have the problem yet. They're still trying to deliver that superior customer experience to everybody and build up that loyalty program. Every time I go to Ulta, man, we're waiting in the cashier. Although I do have to say that I'm in a weird sort of bubble here in South Florida. Dr. Paul, if you ever go shopping in another part of the country, it doesn't look anything like the shopping that you do in South Florida. There's so many people in South Florida that are shopping constantly. It's amazing. It's just remarkable. All right. Now that we're off that random tangent, earnings. So we got 7.8% move last time. Got a 3.98, -2, -7, a 10, and a 20. So some big moves. Some big moves here. And now we've got recently some decent sized moves. I mean, this 7.8 is no joke, and the -7's pretty hefty move. Okay. So these guys have a tendency to move. So Kurt, you betcha. We're definitely going to have a lotto today. I don't even care how expensive it is. We're going to talk lotto because I am feeling that way. So let's see. Yeah, Ulta's jam-packed all the time. So how much of the latest move is due to fundamental versus sentiment? I think it's mostly sentiment. I would say 90% sentiment, 10% fundamental. That's what it looks like to me. I'm going to close. Look, see, it already crashed. Man. All right, let's get back to this. Let's look at bar chart. Let's see what we're looking at here. Oh, man, this is going to be such a fun trade. I'm so excited about this. You guys know I still got my UVXY on. I almost closed it yesterday, but I was like, you know what, forget it. Let's just see this thing out. Because I really want to close it on Friday live with everybody. Because I want to show you guys things. Although I'm sure most of you've already seen it 100 times, but for whoever's out there that maybe is nervous about these things, doesn't exactly know how they look when you make the trade, that's what I'm doing it for, so they can see it. Okay, so 2:30 is where Ulta's trading. They're going to report after the bell on Thursday, so we're going to have a situation Friday morning where we're going to find some sunshine, my friends. All right, 2:30. Let's look at the 2:30s. At the money call, at the money put. You betcha. You knew it was going to be a little bit of money. You knew it was going to cost a little bit. The 2:30 call, 10 by 1040. We're going to call that 1020. At the money put, 870 rather, by 940. So we're going to call that 905. So they're basically looking for 1925 out of this. So almost 20 bucks, 8.3%. So they're actually pricing in a pretty healthy move here on shares of Ulta, okay? Pretty healthy move. 19 bucks. Just to make our lives easier, guess what? We're going to call it 20. So we're going to say 210 to 250 is what the market's pricing in. Back to the Ninja Trader. 250, guys. I mean, I'm sure. Let me see. I'm going to have to load this data series. Sorry, guys. A little bit of the nitty-gritty behind this. You got to actually load the days. Like I said, there's some like wonkiness to this. I don't know if it'll give me 2 years of data. Maybe it will. Let's see. Oh, sure it does. Okay. Cool. So when we're starting to get down here, we're getting into uncharted territory. So 230s, we said 210s is where the bottom end of the market is. I don't want to say gaps get filled always, but this gap is still here and we are approaching it. So the top end of this gap, however, is not 210. The top end of this gap is 214. Right? 214? 214 on the money. It's going to take something to get this down under 214. Remember, this is a stock that was $310, over $310. The beginning of June. Pretty astounding stuff. Now, we did their earnings. I seem to remember this. And being bullish. And being very happy early on. And then it just evaporated. Okay. We're not going to do... no strangle. No strangle, Jeff. I'm not strangling this one. Because I no strangle, man. You'll see. You'll see. Okay. Now, getting back to this. So, I think maybe 214 is more accurate for a floor. Not the 210 that the market is pricing in, so keep that in mind. 214. And then to the upside, the 200-day at 271. But we have this bulge volume into this area. So 214 and then, in the 250s. So getting into the thick of this, having a challenge getting over, that's what the options market is pricing in right now. So this is pretty good. Got a sweet misty rain building up here coming off the ocean here, folks. Fancy. Real nice stuff. That's right. I like the rain. It's okay. It's so cool. The weather changes so fast here in South Florida. It's amazing. All right. So that's what we're looking at. Back to the options chain. Now, remember, detailed analysis here. We don't want to get stuck in a one-day thing. This is a crapshoot. We'll go back to the crapshoot later. Kind of. We're going to look at the September 1st for any sort of lotto action, right? But I think we're going to be better served following up on this on Friday morning. I know, a shameless plug, right? So going out to September is still pretty quick, but that's okay. We can be quick. We can be quick. We're going to do the stacked view rather than the side-by-side. Now, a couple of things. First, the obvious. This is going to be expensive if you're going to want to be long on these because the stock is $230, right? So it's going to get a little bit more expensive to do this in terms of money you got to put up. So what do I mean by that? So even if we, so 250 being the far end of the leg, right? Even if we do my halvesy, you guys know I love the halvesy. So what I mean by that is going long a 230 and going short a 240. It's still going to cost us a few bucks. So the 230 call is going to cost. Oh, come on, bar chart. I love it when they do that to me. Oh, wonderful. Thanks, buddy. Thanks, guys. All right, back again. All right, so long a 230. 240 call spread. So the 230 is going to cost $10.85. Simultaneously selling the 240, get back some of that premium. You're going to get back $665. So you still have $420 at risk, which is more than I like to talk about on these things, right? I like to keep them like $250. So $420. Difference in the strike prices is $10 minus the $420 is $580. So you can make 138% on this. And all you need is shares of Ulta to close at or above 240 at expiration. So you're basically saying, man, it doesn't even have to do the whole move to the 250. I just want to catch this little bit, right? Okay. Now, for the guys that want to get cheaper, which I've talked about in the past before, a couple of things you can do. You could obviously make the short end a little closer in, or we could just pinch a little bit. Just pinch it in. So essentially you're getting awful close to the same sort of winning condition that you're looking for. You are adding a little bit in terms of risk by going out of the money. Because now it's harder for this to be in the money, right? Because you're pushing it out a little bit. But if you think, yeah, on a bullish day we could get all at 250, then it doesn't really matter if you're in on this side. So for the guys that want to save a few bucks, going along the 230, 250 is going to cost $965. Simultaneously selling the 235.50, you're going to get back $755. So in this case, 210 is your net outlay, exactly half what your outlay would have been on the 230, 240 side, right? And the difference in the strike prices is exactly half, right? It's $5. So here you can make $290 on 2.1. Does that number look familiar? It should, because it's the exact percentage gain that you can get by doing the 230, 240, okay? So now for the obvious, well, why the heck wouldn't I just do that, Dave? Well, your break even is higher, right? On the 230, 240 call spread, your break even is 230 plus what you end up paying for this spread, which is 420. So your break even here is 234.20, right? That's where you would need shares of Ulta for you to break even. Now on the flip side, using this 232.50 and 237.50 call spread, 232.50 plus that 210, which was how much you paid for it, is going to be your break even, or 234.60, okay? So 40 cents is going to be the difference in your break even, which I'm sure we could all argue is maybe that's negligible, right? And then to max out, you only need this to go to 237.50 versus 240, okay? So that's the trade-off. So for an extra 40 cents for the break even, is it worth it to add, you know, where I need this thing to get all the way to 240, adding another 250 of risk to the upside? And, why not, right? So I'm going to say a bull debit idea is going to be long the September 15th, and we're going to do the shorter one, the tighter spread, 232.50, 237.50 call spread for a 210 net debit, okay? That's going to be a bull debit idea I'm going to throw out there. Now on the flip side, on the bears, it's going to be pretty similar with the 230 as an anchor. And like I said, 210, sort of what the options market's pricing in. You know I'm a big fan of going halfway, but I'm still going to do the math on this little pinching in for both of us. So let's look at this. Bring the calculator over this side. So let's say we go with the 230, 220 put spread. It's going to cost $11.50 for the 230 put. You're going to sell the 220 put, get back $7.10 of that. So your net outlay here is $4.40. Difference in the strike price, $10. That means you can make $5.60 on $4.40 or 127%. Now let's pinch it in. Instead of using this, we're going to use the 110 and the 790. Don't act too shocked, guys, when you see the numbers here. 10-10. Come on. 10-10. Okay? If we're going long, 227.50. Gonna get back 790, 220. Again, do I need to do the whole thing, or you guys already got it? Of course, you already got it. The other trade was 440. This is 220. The other trade was $10 in difference in strike price. This is $5 in difference in the strike price. Your actual rate of return that you could potentially get is going to be the same. The amount of money you're going to have at risk is going to be less, but your break evens are going to be different. On the 230 put spread, your break even is going to be 230 minus the 440 that it costs you to put on that trade, or 225.60. On the flip side, the 227.50 is going to cost you 220 or 225.30. Okay, so a little different break even. Very close though. Similar risk versus reward scenario. Stock doesn't have to travel as far for you to max out when it comes to the 225. Okay. So in keeping the theme here, I'm going to say that a bear debit long September 15th, 227.50, 222.50 put spread for the 220 net debit. Okay. All right. Does that make sense? So we found ways to make it more accessible, a little bit cheaper to get bullish with this or bearish with this, expecting a move. Now, here's another thing, though. I want to give you, well, right off the bat, I'm going to say the trade that pays is bullish. I love how I say right off the bat, 44 minutes into the episode, but I think I think going bullish is good. So if you want to get more aggressive in your spread, you can keep inching. So if you go a little further out of the money and then now kick this can down to 245, the risk profile, the payoff is going to get a little bit bigger and a little bit bigger. And then if you went 240 out to 250, obviously your payoff is going to get a lot bigger. So by scooting down the line, now going along the 240 call is going to cost you 665. Simultaneously selling the 250, you're going to get back 370. So here you got 295 is your outlay, but you can make 705 on the 295 or 238%. So it's more than a triple up in this case. And all you need is shares of Ulta to close at or above 250 at expiration. This is, 4-star, almost 5 stars of risk. I mean, one of the most risky things, right? Because you're going out of the money. The only reason why I'd call this 4 stars of risk is because you are still selling the 250. And that's going to act as a little bit of a buffer, right? Now, if you want to do a butterfly, Fernando, go right on ahead. I've been trying to, I did a couple of those. We did some butterfly stuff. We did some diagonal call stuff. And I think we had a tough time. We don't have the systems in place to properly keep tabs on the evolution of these trades, right? So we can't go back and it's just not right. It was wonky. I'm doing it on a spreadsheet on GBU. So I've been, much to the chagrin of Mr. Phillips, I've been avoiding doing a lot of calendar stuff and butterfly stuff just for simplicity's sake, right? I'm just trying to subscribe to the KISS method, I suppose. Okay, so guys, if you're going to buy lottos, don't do the one day, right? I'd suggest we just wait, right, for Friday morning, and then Friday morning we all come up with an awesome trade idea. I think it's gonna be fun. So, but if you must, go out just to September 1st, and then you still can't just I don't know that you want to spend $300 on a 250 call. See, if this is a $25 stock, this would likely be 31 cents, right? So then it would be much more fun for our lotto seekers. Versus now it's a little, it's a little wonky. And even going with out of the money call spreads on this, if you're buying and selling, it's still, this is going to cost you what? Almost 87 cents. 83, here. 93 cents rather. Sorry, I flipped upside down. Still going to cost you 93 cents with a $5. So, Dr. B, you're in the future, man. You are in the future. Did you come here in a DeLorean? We're going to do a Vago or Broadcom. I keep calling it a Vago for obvious reasons. Mañana. Yeah, we're going to talk them tomorrow. Okay, anyway, so for these lottos, guys, if you get out here, you're going to get the payoff that you want, maybe, right? 93. You can make 407 on 93. My suggestion, though, is that we just wait till Friday morning. And you join us Friday morning for the morning after session where we're going to have a live reaction to whatever comes out of this Ulta earnings. Okay? Now, you got it, Dr. B. Live reaction. So we're going to, I give the market a half hour to open, right? And then we go ahead and talk at 9 a.m. Central. Something like that. Are we in daylight time? I think we are. So 9 a.m. we're going to talk Ulta, guys, on Friday. That's going to be good. But I'm not going to leave you hanging because we are tomorrow. I'm going to call that audible tomorrow. Dr. B, you're going to be there for the Broadcom. Tomorrow, it's 11 a.m. Central. Is it CDT? I think it's CDT. I like that. The day that pays trade. I like that. I like that, Dr. Paul. So, guys, join me, please, on Friday. Join me tomorrow, heck, too, for the Broadcom thing. We're going to talk Broadcom tomorrow. And then, yeah, what else do we got? Got nothing, right? The Best Buy thing, maybe I just won't do Best Buy at all. It didn't sound like too many people were excited about Best Buy, so I don't know. We'll see. That's it. That's all I got for you here today, guys. So overall, I'm bullish on this because of how nasty this has been. I just don't. Why is this so nasty? Why is this a $310 stock that's at $231 when we've already seen where trailing 12-month valuations are? We've seen where it's ST now, right? We're in ST because it's after. No, we didn't fall back yet, right? After we fall back, then it's standard time. Right now we're on daylight time. Isn't that how it goes? I don't know. Anywho, all of this pressure here to the downside, I think it's overblown. We already saw the valuations really shouldn't have been crunched the way that they have. Looking for a reason why. And we have this magic magnet of this volume at the 250. Now, I'm saying this with a little bit of trepidation, obviously, because, man, look at what the market did to Momo. You know? Everything was great here. They didn't care. Slayer, right? They crushed it. So, obviously, that's a worry that I have with Ulta, but that's why we use options to play the game, my friends. Limit your risk. All right, guys. I was a little bit long-winded today. Officially, no lotto trade, Kurt. Officially, stay on the sidelines or put on a call spread. Out of the money, but stay on the sidelines. I thought we were going to have a lotto, but it's just too expensive. That's all I got, guys. So, thanks so much for hanging out with me here today on Zacks Live Trader. Again, I'm sorry it lasted 52 minutes, but sometimes I get in the zone, man. Wait till Friday, Kurt. We're going to have a trade that pays. It's going to be fun, and we'll go from there. So thank you guys so much for coming out here to check it out. Thank you so much, and we will see you guys all mañana. Have a good one.